I'm chairman of the audit committee.
Don Coles, a citizen member of the audit committee.
Dan Howell, a citizen member of the audit committee.
Kristen Nye, member of audit committee and member of council.
Lou Lassiter, city auditor.
Yolanda for City Auditor's Office. Jennifer Harville, City Auditor's Office.
Rochelle Carter, city auditor's office.
Brett Lewis, city auditor's office.
So who's the one?
Nick Cheney, audit committee, CPA member.
We're going to the back of the room, please.
Robert Floyd, deputy director of finance. David Rickus, senior deputy director of finance.
Agent Strategy Program and Operations Manager for Finance.
Chris Brokey, director of park and recreation. Facility.
Sean Giles, director of social services.
Jim Epstein, assessment. I'll that's it.
Jason May, I'm the director of budget and strategic planning.
Julian Castro, City Auditor's Office.
And I know we have two folks on the line. Oh, there's we go. We have Mr. Saunders that just joined us.
How you doing?
You want to introduce yourself, then, please. Then we have, I know we have Mr. Bemis and Mr. Busnick on the line remotely.
Yes,
Sam, you
I'm
there?
here. Joe, Sam, I'm here.
Thank you. And Greg, you there?
I'm here.
Okay, great. The minutes were circulated earlier. Are there any corrections or additions to the minutes? If not, do I hear a motion that the minutes be approved?
So moved.
All in favor, say aye.
Aye.
Minutes are approved. Okay, Greg, you are up with an update on the 22 single audit update.
Okay. Good afternoon, everyone. I think when we last talked, I gave you an update on the internal control findings that we had related to the financial statement audit, and we were completing the single audit. So at this point, we have issued our single audit report. I believe you all have copies of the final single audit report, as well as the corrective action plans from management. So I was going to walk you through the report quickly, and then answer any questions. So when you look at the single audit report, there's two reports in here. One is the report on internal control over financial reporting and compliance. So this is the report we covered previously. This is so this would be related to financial reporting and financial statements. The second report, which should be page 3, is the report on compliance for each major federal program. So this is the single audit report. So this is the report over the federal grant dollar expenditures. Yeah, so this is the same one. So let's make sure. Now, I think you want to go down page 3. This might be, hold on, I missed the top part. I think this is the management letter related to APA findings. You should have a separate report. That's it.
It's hard for us to read this anyway. Why don't you just make the points that you think are important?
Okay.
What's that? It's right now.
So page 3, so the first report is the report we discussed previously, and this is a report over internal control over financial reporting. The second report is over federal expenditures. And in that report, we identified 2 findings. We identified 1 material weakness and 2 significant deficiencies. Those reports, so then, and within this report, it does discuss the other documents within the single audit report. So there is in addition to the reporting related to grants, there's also the schedule of expenditure of federal rewards. So that's the page that shows there's about 3 or 4 pages there that shows roughly 64 million in total federal expenditure spent during the year. So overall, we issued an unmodified opinion over the federal grant dollars, but we did have the findings that I've mentioned, and the findings that we have are related to 3 programs. So we have, and I think you guys have been through these, but the findings, let me find them, sorry. So the single audit findings start with finding number 2022-04. If you want to page down a little bit.
Page 15.
Yep, page 15. So 1 through 3 are the findings that we discussed previously about the financial statements. So go a little more. There it is. So we had 4 or 5. So the first one is related to adoption assistance, and this was a significant deficiency. And what we found in going through the files is a lot of the documentation that's required to be included in the files was there. But on page 16, you'll see that 9 of 40 children tested, there was information that wasn't included. We were able to look at case notes and get to see that that it looks like that the procedures were performed, but the documentation wasn't maintained. So the recommendation is that the files be maintained. So this is here, this bullet point here, 9 of 40. So you see the cause. It looks like they were performed by different folks, different some outside organizations in the city. But the recommendation is that the file be maintained in compliance and that folks within the organization review the files more timely to make sure that all the information is included. All right, so the next finding is finding number 2022-05, and this is related to TANF. And what we found in TANF was something similar, that some of the documentation wasn't maintained in the files. So you can see here 24 out of 40 files. Some of there were case notes that indicated that work was done, but the support wasn't maintained. So in these cases, we're recommending the same thing, that the files be maintained in accordance with standards. So again, it's case notes, but to make sure that staff are maintaining a quality control process to ensure that required eligibility verifications are conducted and properly documented in the files. And then the third finding we had in the single audit is 2022-06. And this is related to CDBG. And this is FFATA reporting. So this is it's not a new reporting requirement, but for this year for us, it was new required to test it. And what it is that there's certain grant dollars or expenditures over 30,000 when they're made have to be reported to the federal government. And what we found is that the reporting wasn't done. So it appeared to be an oversight, but it was, I think the overall cause that we got to was that there was staffing shortage and that the information wasn't uploaded into the system that gets reported to the federal government. So the recommendation was that, of course, that the reporting be done in the future. And management's response was that they plan on making sure it's done going forward and going back and fixing what hasn't been input so far. So those are the key findings related to the single audit. I'd be happy to answer any questions you might have.
Does anyone have any questions? I'd be interested in hearing from the city on where you stand in responding to these findings and adjusting. Yes.
So we will go ahead and start. Unfortunately, Sheila, what about finance directors on vacation? And which he was here in the proof of vacation, but you had me in return. I will try to do her justice. We agree with her findings and we're putting in necessary action to correct it by spot checks and creating checklists and having more supervisory rules and checks along the way.
And you expect that will be done, so we don't see this next year?
I do expect that, yes. And I think the last reporting requirement on CDBG was a misunderstanding from what I understand, of course, that they were not aware of it. And obviously, this was a new requirement to test it, so it's on task to be corrected.
The corrective action plans were sent to the audit committee for those findings, but I can resend them to you if you would like.
We did receive them. I was just interested in knowing where we stood in terms of getting those corrective action plans actually happen. Does anyone have any questions for Greg on the single audit?
But just remind me, how we confirm compliance. Is it with the next single audit?
Yeah, as part of the next single audit, we'll review the prior year findings. We'll ask management to prepare a status of where those recommendations are in implementation, and then we will test those.
Okay, if no further questions on the single audit, Greg, do you want to give us an update on the fiscal year 23 audit?
Sure thing. Yep. So audit process is ongoing. We've begun our risk assessment process and our internal control process. So the risk-based approach that we use involves interviews with city staff and management and governance. In addition, we will perform tests of controls over key areas within the financial statements. One new requirement this year from new auditing standards that have come out is to discuss just to communicate the overall risks to governance. So we need to let the audit committee know today that as of today, the risks that we've identified, and these are some fairly standard risks within the government realm, but the ones we've identified so far, one is related to revenue recognition. And so when we look at that, what we're considering is the timing of recognition and then the proper accrual of certain things. So we're looking at grants. For those, we're looking at the timing, the availability of the grants, then also any matching requirements, things like that. Then we look at exchange transactions. So that's over some of the different billings for utilities. Then we look at the revenues and billings over key tax cycles. So those are the main areas for risk that we look at under revenue recognition. And then another potential risk is management override of controls. And what that indicates or what that means is that as we take a look at test transactions throughout the process, when we look at revenue expenditures, accounts payable, those kinds of things, we test a number of transactions, test controls over those transactions, excuse me, and make sure that they're properly authorized and executed. But one possibility that management could use to override the controls in place is to go back and record adjusting journal entries that could, they can wipe out what you've already booked and properly recorded and reclassify certain things. So we do look at, from an IT perspective, we look at who has access to make such journal entries, and then we actually test a sample of journal entries that are recorded through the year. So we're looking for incompatible duties and then also inappropriate journal entries to make sure that there has been no management override of controls when we're testing through the process. So that's from a risk perspective, those are the two key items that we've identified so far. If anything else comes up, we'll communicate those with the audit committee and let you know. But as part of our internal control process, we do have interviews with key folks within the different departments of the city. We look at key revenue and expense cycles. And then we do perform walkthroughs of transactions. So that's to make sure that our understanding of the controls are operating as we understand it. Then we perform tests of effectiveness. So that's actually tests of controls where we pull transactions and test those. So that's about as far as we've gotten with the financial statement audit. Compliance auditing, we're working with the internal audit group to have those folks help us. They give us some hours and assist us with some of the compliance testing. So we're working on that with them to coordinate that testing. And the objective this year, management's goal is to report a little sooner than it's been in the past. So we're working towards a little more of an aggressive timeline to work through the financial statements and get those issued earlier. And then we would complete the single audit after the financial statements have been completed. So that's kind of the high level overview I wanted to share with you today, and I'd be happy to answer any questions.
Any questions? Are you getting the cooperation that you want from the city representatives?
Yes, so far so good.
Good. Okay, thanks very much, Greg.
You're
Appreciate
welcome. You guys have a nice day.
Okay, let's turn now to the audit reports, and the first relates to the meal tax process.
Good afternoon, everyone. We completed an audit as a part of the FY 23 annual audit plan. First, I would like to thank the finance department for all of their assistance throughout the audit. I would like to recognize our auditors, Jennifer and Daryl, for all of their work on this engagement. The objective of the audit was to evaluate the controls, compliance, and monitoring of the mills tax revenues. Our scope was FY 22 in the current environment, so we looked at the mills taxes that were collected. A little background about the city's mills tax. Mills tax is a self-reported consumer trust tax. The mills tax rate for the city is 7.5%. And those taxes are due the 20th of the month after they've been collected. The city also offers food establishments a seller's commission of 3%, which is basically gives them a discount for collecting and remitting the mills taxes to the city on time if they do not have a delinquent balance. Tax proceeds are one of the primary revenue sources for the city. Approximately $46 million in mills tax were collected in FY 22. Now, sorry. Next slide. So what we did is we did compare the city's mills tax revenues to some of the other localities in the state. And after normalizing the revenue per capita based on the mills tax rate, we noted that the city was per capita was comparable to other Virginia localities, but had an annual mills tax revenue of at least 10 million or more. There were some outliers in our analysis, like Harrisonburg, Fredericksburg, and Charlottesville. They have smaller populations, and their impacts on the revenue from factors such as tourism and large universities, which makes the per capita normalized a little bit higher than the city. Now I'll turn the presentation over to Jennifer to talk about what works well and what isn't working.
All right, what works well? The mills tax, interest penalty and seller's rate commissions were all set up in the revenue system correctly. The billing cycle was properly coded in the revenue system to ensure that mills tax due dates were set up, and they were also adjusted based on the business day. So for example, if the 20th fell on a weekend, they were adjusted automatically in the system so that it would be the next business day. The Department of Finance offers businesses several options to remit mills taxes. You can do mail, in person, and online. Next one. Now we're going to talk about what needs improvement. Statutory assessments. We reviewed 454 businesses with unfiled ALM, which is admissions, lodging, and meals, for at least 1 month during fiscal year 22. Approximately 59% of these businesses had 6 or more unfiled periods. 22% of them were contacted by tax enforcement, audit, or delinquent collection staff at some point during fiscal year 22. But it may or may not have been related to the non-filing status. Virginia code states that statutory assessments can only be completed for 3 preceding tax years after the applicable tax year. Statutory assessments were not conducted for the non-filers. The assessments were suspended during the onset of the pandemic, and as of January 2023 had not resumed. And as such, the city's window for completing the assessments for calendar year 2020 is sunsetting. Prior to the pandemic, 529 mills tax statutory assessments were completed between June 2019 and March 2020, allowing the city to levy taxes totaling approximately $2 million for businesses that had not filed mills taxes. Additionally, in reviewing tax enforcement activity, it was noted that the non-filing information may contain inaccuracies, as closed businesses may not have been identified promptly and recorded in the revenue system. We researched a sample of 25 of the non-filing businesses and found that 17 appeared to be closed based on internet searches and active telephone numbers. Next slide. Mills tax remittance. We obtained a listing of the businesses from the Health Department and the Virginia Alcoholic Beverage Control Authority in order to develop a sample of 127 businesses within the city. We found that 80% were remitting meals taxes to the city. 10% did not remit the required meals taxes to the city, and of those, 3% or 4 businesses were not on the non-filers report. Therefore, they were not on the city's radar. Of the 4 businesses not on the non-filers report, three of the businesses had the ALM, the admissions, lodging, and meals tax account deactivated in the revenue system, and 1 business was closed in the revenue system. We did visit all 4 of these establishments and observed that they were selling prepared food. We could not locate business license information for 4 businesses in the revenue system. However, these businesses were inspected by the health department during the audit scope. Therefore, they may be operating within the city and not remitting mills taxes or other required cities taxes. Based on our estimated sample, lost revenue could be in excess of 1.5 million annually. Next slide. Reconciliation of account balances. In June of 2022, the Department of Finance implemented a partial payment letter process to send account information to businesses that had made a partial meals tax payment during the prior week. Prior to implementation of the process, businesses were only notified of outstanding balances if they were selected for a tax audit, when tax enforcement or delinquent collections initiated contact, or they requested an account reconciliation. Partial payment letters are mailed weekly to businesses that remitted payments insufficient to cover the amount due. Between July 12th and December 19th of 2022, approximately 1,500 letters were sent to 491 businesses. The letter included the applied payment amount, the remaining account balance, and notification that payment was applied to the most delinquent tax year first. While this process provides information to business owners, accounts were not reconciled timely. Therefore, incomplete information may be provided to the business owner. Next slide. In conclusion, we issued 7 recommendations with 100% concurrence. Implementation dates through June 30th of 2024. Time spent, this was on the fiscal year 2023 audit plan for 750 hours. Budget after planning was 920 hours and actual was 989 hours. Any questions?
Before we get to questions from the committee members, does the city administration have any response they'd like to make to this?
Okay, we'll just say again, I think to obviously take collecting the taxes that are owed seriously. It's important that from an equity standpoint that all businesses are held to the same standards to collect and remit. Meals taxes as a trust tax are to have a monthly basis to present additional challenges. I think Sabrina's going to speak a little bit to some of the staff augmentation that I think we need to do, having reviewed your localities and size and scale as far as what those responsibilities are and what we need. I would just add that I think we are roughly only a month removed from both the federal and city removing some of the COVID-19 emergency guidelines that while we certainly maintain the obligations related to tax collections, we have been, I will say, slightly more understanding and trying to work with our businesses as they responded to the pandemic. I think those are some of the major points other than to say, I think we have full concurrence with the recommendations and are looking forward to implementing the fixes we need to make sure that we are collecting that time frame.
Thank you. Questions, members of the committee? Yes, question.
Thank you. Thank you to the team for doing this. Thank you to the administration for working collaboratively. So meals tax has been something that, has come on and off our radar over the years. We talked about it a lot when Mayor Stoney first got here. The increase in the meals tax and also during the pandemic and working with our restaurants and everything. So what I have continued to hear throughout the years and still hear is restaurant owners have a very hard time getting an accurate balance on how much they pay and how much they owe. And because if a bill is outstanding in our finance department that is unrelated to the meals tax, it can get bundled in there and they don't know that. And then they're charged a late fee and they never see a balance, or it's very complicated for them to get a balance of their meals tax. I've spent a lot of time on the phone with some of our really high profile restaurant owners in the city. And this has been going on for years. And so that's my first question is, what are we doing to move to a place to have better communication, clearer understanding with them? I have one restaurant owner who had thought they were submitting their payment, and I don't know, like if a number was off in their account or something, and the payment wasn't hitting each month, even though it said, we've received your payment. So when they found out was when they got a bill for like 5 figures from the city. And it was extremely overwhelming. So that's my first. Then my second is with the businesses that are not on our radar. What is your plan to go in there and get them, educate these owners that they do have to pay the meals tax, give them the technical support to help them along. And then, is there an opportunity for some sort of tax amnesty program like we did when you guys first came in regarding real estate to get everybody to a good place so we don't have all these people who are so far behind in their payments that they've just kind of shut down and stopped paying.
I'll let Springer respond to the amnesty issue. I will say, oh, thank you. I will say on the payment side, and I think this is consistent with how we are working to view all ways that citizens interact with the city to make payments for whether it's personal property or the state or otherwise. We have made in the last several years the decision to move away from our current munis system to RDA pays. I think council members received some updates from the city, from the administration yesterday, from Ms. Boyhog. In this vein, I'm excited about the opportunity RDA pays presents for individuals to be able to log in and see, as you know, many of our restaurateurs own not one business, but several, right? And in many cases, delinquencies in one account can end up affecting them in another. They're, under the same type of same LLC or corporate management. So the opportunity RDA pays presents for individuals to both be able to log in and see balances, as opposed to using the more paper-based system that the current meals tax collection system does use. Is a significant, I think, move into the 21st century for how finance is able to collect taxes. We have moved, I think, large part personal property this year into that online RVA based system. So citizens are finally many of us received, an email getting up next to your account with where your personal property tax bill was mailed to you, and not just your normal mail-based system. For restaurateurs and ALM preparers, will be able to, again, similarly log in. I do believe it's going to still require that self-reporting of your collection, so that calculation is done, and self-reporting of your sales, right? But then be able to see their standing and the mirror if they do have multiple business accounts. So whether it's a business license, their property taxes, their personal property, and their ALM balances, and know immediately whether they are in arrears and what they need to do to fix it, if it's been a coding error, if they, you know, had misplaced a digit on the account number and submitting a check-based payment or something, catch that early before late fees start accumulating and they're unaware of that, right?
What's the time frame?
Like the timeframe for implementing all of RBA pays is essentially through the end of 2024. It's, as we mentioned, there's multiple different modules, which I think equate to taxes. So, you know, partial property tax is a module, real estate tax is a module, with various forms of ALM and other tax payments are additional modules. So we're bringing it on in a phased way. It's not all at once, you know, flip the switch, but it's a phasing in and moving from units to RBA pays. Again, I think RBA pays represents a more 21st century way for finance to, you know, provide billing and collections. As far as the amnesty, that's not something I think that we've considered at this time, but we are happy to consider it and come back. Again, you know, speaking to the COVID-19, and I can recall at least 2 amnesties that we've done in the last 2 to 3 years. Certainly open to doing further ones, you know, particularly as we work to support our businesses and residents. As we do move out of pandemic phase into hopefully more normal course of business going forward. So while we'd be unprepared to make a commitment today, I'm happy to talk to finance, city attorney's office, and consider what our options are for providing amnesty in space.
One quick follow-up. So if the lost revenue that the auditors are thinking is 1.5, and we have 3 years to recoup it, I think that's 4.5. That's not nothing.
Correct me if I'm wrong,
I could-
we are still within the period, we were still within the 3-year statutory period.
Right, there were 2 things, the statutory assessments, and then the lost revenue was based on the ad hoc or sample from the ABC data and also the health department. It's the 2 separate pieces. The lost revenue for the statutory assessments are the ones that were already on the radar and they did not pay. The other ones, the 4 that Jen mentioned, were not on the revenue. So you have 3 years. The clock is ticking for that first year from, I guess it was 2020, that we have not done statutory assessments, and you've got to get them out the door by the end of this year.
And you restarted the statutory assessments.
So, speaking of,
Good.
let me just address the questions. As far as the bills going, I've got the experts, so if I don't get up there, it's not painful. As far as bills go and people understanding what they owe, finance doesn't really send out bills. This is a trust tax. So the onus is on the businesses to report and file. Finance doesn't know how much they do in bills at sales. It is all up to the businesses. If they do not file and they do not remit taxes, it's actually a misdemeanor and it's considered embezzlement by code. Finance, Sheila, because Sheila White, our finance director, is the treasurer and the commissioner. She has certain powers. She can actually go in and lock up the businesses if she wanted to. We haven't gotten to that point. Finance department has a lot of tools that they can use to make people file and pay. They haven't gone to that level yet because we want to work with the businesses. The non-filers, finance now gets a monthly report of non-filers. There's about 300 per month that come through. They're working through those non-filers. You can't do the statutory assessments until the non-filer list is worked through to see which businesses are still valid, still are in operation, and we can still collect them. Because if you go out and go in the assessment, they don't exist, we're gonna have some challenges there. So they're working through that list. Again, this is an old system that we're dealing with. There's a lot of data through that. And back when the audit was done, the time frame was 2020, 2019, that was high COVID time. A lot of these businesses were closed and at some point became carried over. The restrictions on businesses and social distancing wasn't lifted until May 28, 2021. So the period that the audit covers, a lot of these businesses were not at full capacity. So just want everybody to keep that in mind. And as far as the non-filers go, as I said, their finance is sending out notices now that says you're on the non-filers list and they're working through that. That happened even before the audit was coming out. They've also gone to third-party collections tax, TAC tests. So they're sending the delinquencies over. That wasn't happening before. And then as far as
There was a conscious decision made during COVID not to send people to collections at that period. But that as just as in other places, we have been restarting that collections process as we have exited the pandemic.
So, and as far as the payments go, the way it works is when a business, if they own personal property, tangible property, meals tax and all of that, if they submit the bill and it's designated for meals tax, finance will apply for that meals tax, right? But if not, if it's not tied to that bill, they have to by law apply it to the most delinquent tax first. So that could be a personal property tax bill that they hadn't paid 2 years ago. Finance by law has to apply it to the oldest bill because of that statutory 3-year plus 1 requirement. That changed in 2019. Prior to that, we were not doing that. We were applying it to the most recent bill. That's against code. So finance has changed that, and that's causing some of this consternation out in the community. Because I don't think we did a good enough job to explain that to businesses, is that by code, we have to apply it to the most delinquent account first, unless it's designated for a certain type of bill. That goes across the board. So that's the bills and the payments. So when you say, can finance send them a bill, they really can't, because they don't know what bill they're going out to. So what they do is they send everybody a notice saying that if you're on the non-filers list or you haven't remitted payment, they send them a bill or send them a notice saying, we have not received your payment. It says, please contact Department of Finance, because what finance wants the business to do is call and have a conversation so they can work through the account to see where they need to apply the next set of bills or where the delinquencies are so they can pinpoint them. So even if a business calls 311, that person on 311, if it's a complicated account, they won't be able to tell them, which is why finance wants the business to call them and work through the account and all of the delinquencies, all of the interest. The other thing is these bills are due on the 20th of the month. If they're late by a day, 21st day, they get penalties and interest. And so the payment may have been applied to the 20th, but now they have penalty and interest, which then starts accumulating over time. Right, so this is why we need to go to RBA Pay, where I, as a business owner, I can look at my account and I can see it. Right now, the only way they can do that is to call. That's what we're trying to change. That's the Munis system was implemented in 2004. It's a fair of the system. It doesn't even have support at this point. It's going to take some time to change over all of this stuff.
And I guess that leads me back to my question. You're touching rapid. Better capture these dollars. Is it an infrastructure, software issue, FTE issue? What can we do down the road?
Yes.
Okay, all right.
I think you should speak to it. So when they did the analysis of, Norfolk, Virginia Beach and Richmond, and again, Sheila, I'll let you speak, but Sheila is the director of finance in the city, as both the treasurer, the commissioner of revenue, and the director of finance. In other localities, that's 3 positions.
Yeah.
With at least 1 or 2 of them elected. In Richmond, for the total of those 3 offices, which is our Department of Finance, we have 112 positions. Norfolk, that is 137. Virginia Beach is 205. Norfolk in particular, population wise and otherwise, very, very comparable. So we're using this data to help inform some of the recommendations we're making. The added positions council approved in this FY 24 budget, but I think, this data, this audit and other, demands, particularly of implementing both in tax and audit, to meet some of these recommendations. I think we may need to move even faster to augment the staff and this fund.
So we also, definition of revenue, would that be a charter issue for us then, or? Or how we begin to split out some of these duties? One, I just saw the commissioner of revenue, Chesterfield Sunday, so.
In other localities in Virginia, commissioner of revenue historically was an separate elected position. I don't believe we would sit here and recommend they move to a separate elected position.
Okay, but how do, and I apologize, sir. Are those too many hats for one person to wear?
I don't believe it's too many hats if it's properly staffed. I mean, the functions are strongly connected and, Luke's quietly nodding that there's, and I will say, if you look at other localities, there's often, again, having a separate elected commissioner of revenue doesn't report into the, administration and to the, with the director of finance. Sometimes it can work very well. Sometimes it's, it creates, unnecessary conflict between different branches of government. Or different, elected leadership. I think we need to staff, but I will say even from the first time, I and Mayor talked with Ms. White about the director of finance position. She was very clear that, staff is critical, but technology is the path forward for solving this. And that's why really from the time she began, she's been working on implementation for our VAs. So in addition to all the other work conversations we've been having about finance, the work on our VAs has been going in parallel. Because without that technological solution, staff will never, what we want to do is empower our businesses and residents to be able to see, manage, and and pay their accounts without necessarily needing to recall finance. If you're having an issue, if you're having, you've gotten behind in multiple places and you want to make sure you manage it in a way that is most sustainable. I think clearly we want to make sure we provide good customer service there, but if I'm wanting to pay Verizon or Dominion, I don't necessarily want to have to call the line. I want to be able to log in my account, see my balance, know when my next due date is. I think no hassle or fuss. It's unfortunate that our legacy system doesn't provide that capacity today, but that's why we're building the new system to provide that solution.
That's just a real basic question because I don't think I understood correctly as I read the report. What assessment was suspended by city council?
Statutory.
Statutory, yeah, assessment. It wasn't city council, it was Virginia code. What was?
So it wasn't suspended. I think what happened was it stopped during the time of COVID.
So assessments were suspended during the onset of the pandemic and have not been resumed as of January 2023.
Right,
What
so
assessments were suspended?
when people don't file repeatedly, finance can go in and assess them, tell them this is how much they owe. Sorry?
An estimate of what?
Right, an estimate, right? They can do that. They're trying not to do that because we were in the COVID time and they're trying not to penalize people. Also businesses will close somewhere, only partially.
It would be a parallel to sending accounts to collections, again, rather than continuing to provide some grace for residents and businesses. Or in DPU's case, for example, as we discussed, I believe in our last audit committee meeting, when shutoffs we were no longer shutting off services due to non-payment, but we are now in this phase moved to a place where we're letting customers know that if you don't get with us on a payment plan or get a good standing, that is now something we are reinstating, is that shutoffs are an option.
So
Supplying statutory assessment.
There's a chart on page 6, which says it gives the number of accounts reviewed and then the number that were assessed. And they're basically a quarter of the accounts reviewed were assessed. You see what I'm referring to there? The total is 1,800 accounts reviewed and 5 were assessed.
So Don,
What does that mean?
this is, okay, so they suspended doing statutory assessments in March of 20. Prior to that, for the tax year of 2019, they issued $2 million of statutory assessments.
Does
We
that
have
mean-
not done them since then. Our audit scope period was 2022.
But does that mean that out of the 1866, that the 1,300, we did not get an assessment, that it was concluded that none was needed?
They were just saying.
They were in good state, that's what that means?
So that could be a combination of when they did the research, they found out the businesses were no longer active. They were actually closed businesses, which is one of the things Mr. Joe Howard talked about when bringing the non-filers list. It also could be a scenario where you're looking at the first column, 1866. That's all ALM accounts, emission, meals, and lodging.
Right.
We only did as a part of our audit focusing on the meals tax. And so that's what that second column is. So some of the other ones could have still had an assessment, but maybe they were all just hotel lodging, or maybe they were just emissions and not the actual meals tax. So that's some of the difference that you see there.
So I'm talking about staffing to do assessments. So we're talking about it just on the meals tax or on ALM?
Could be both.
I'm confused about
It could be both. You could have staffing in the finance area deal with both.
So right now it's meals taxes, the assessments were 2 million over that period. Where I'm going to is that can cover some staffing. Right? If you do those collections, your revenue goes up. Yes, your expenses go up, but hopefully net, you're coming out better. Is that the right way to think about it?
Yes. And that 2 million is not just meals tax, it's in it's lodging as well.
No, that says meals tax.
That's a bit.
No,
It's a different.
Yeah. the first column.
So it could be more than that. Yeah, it could be more.
So staffing is an issue for not just finance, but all across the city. And we're in a very employee-centered market.
Yes,
right?
yes.
It's across the board, not just the city, it's everywhere you go. So finance alone, I mean, if we just take finance, yes, it is a struggle to get people of all levels. But that's why the city is going through this whole compensation performance review to look at the salaries and competitiveness. And to bring people on, what do we need to keep from, what do we?
I understand. That's just trying to make certain I understood the revenues impact that we're talking about here. I got confused about the assessment mechanism. So, thank you for taking the time to educate me.
There's a chart in here, prepared food tax, 45 million in 2022. Any idea how many payers that is?
About 1,500 on the books for meals tax.
Right.
1,500.
And so you tested 100 and roughly 13% were not paying and not filing or high.
Or they don't exist anymore, which is what they're working for.
3%, not 13.
Well, 7% were not filing. Another 3% were not on the list, but not filing or were not filing. And then 3% they were unable to conclude, but they said that they're open and they went there and found them, but they don't know why they're not on here. So it's about 13%.
We'll just, sorry, I don't mean to sound like it's pushing back, but the 7% that are on the non-filers report, which means that they are on finance's radar and we are aware that they need to remit. Now, just to be frank, right, on something that's a monthly payment, et cetera, I mean, we do have to go through this, the deadline and et cetera, and hopefully catch up quickly, and it's not, the numbers that were applied where it's multiple months of running with sort of that it carries past fiscal year into next. Or I think the other concern that we're blues flagging, we're aware of is not allowing it to extend beyond the statutory collection period, right, which is that 3-year window that the discussion.
Exactly.
The 3%, which is one that I would say, I think, grant, again, opportunity for us to work with the auditor's office to see if we can find any trend in the 4 that were essentially not remitting and not on the non-filers list. That 4 out of the 100 plus, the 3% is one that I think we certainly need to look into to make sure we're getting. We have 100% of our businesses that should be collecting meal taxes are on our radar and fully being better. So I look forward to following up. I'm sure Sheila already has got some details about that to make sure that we, can capture, again, 100% of those businesses, but they're, I guess I'm just cautioning that they're one of my hopes would be that with an RDA system, we get much closer to 100% of folks who are on time, in their payments.
But that's the assumption that the software or the technology is the issue versus the negligence of the actual business, right?
Yes, sir. I think I'm trying to provide some grace and not say out loud, which is that we're always going to have some businesses who do not pay on time. And during COVID, we provided more grace and latitude than we did prior to, and that we probably will provide going forward. But the last 3 years have been a period of more grace than just as in other audits that we've seen in the last several months. The city took a very, and I would say, received a lot of feedback from the community and business members asking for that grace in this period about whether it's DPU shutoffs or tax collections. In the period, it's why we did amnesties for those who due to the changing economy, loss of employment, et cetera. We wanted to work with our residents and our citizens.
So we just read that over.
So because,
And then I'm sorry, before we move, and I'm not making a case for more head count outside of this is really a case for head. You can almost say if we're missing 2 million a year, right? That you have an ALM manager solely focused on ALM, that position pays for itself, because I guarantee it's probably more than 2 million. Right. And again, I mean, I'm not the big government guy or anything of that nature, but if we're missing 2 million plus per year, this is not judging anyone outside of looking at, hey, how do we, find a better process, right? Just getting someone who focuses solely on this, that'll get me to 2.5 a year. That person and or staff pays for itself, and we have a decent delta that we're not going to capture. Because I know I've talked to some businesses, I'm not going to name them, but there's no hope in recovery for someone. And they're still functioning. I don't know if they're picking back up their payments. I kind of bowed out after that. But I would really make a case to say, this is not necessarily to say take it from underneath Sheila White or whatever. But what I am saying is to have an ALM manager or 1 or 2 bodies that focus on that, we're talking revenue day one.
Let us take that recommendation back and come back to you with feedback into our recommendation and response.
What is your flexibility as far as compensation goes for a position like that generate that kind of return for the city? I mean, does it have to fit within a framework of this level and worked here this many years, or is this?
One of the side conversations before Audit and I had prior to this is that knowing that based on comps with other localities, we need more positions in finance. I also know that the last 2 years it has been a challenge to hire across all city departments, but in this way, let's like to probably speak more directly to finances challenges in hiring. So again, everything is connected and everything. One thing leads to the next. This is why we are also doing the class and comp review, because it is also likely that we need to adjust up salary offerings for the positions that we're looking for that have, whether it's the accounting expertise with CPAs or the experience and skill sets we need for in the collection side and or audit side of finance. So as I think I've shared with the audit committee on a couple of different occasions in response to a couple of different questions, the class and comp review and being able to move into implementation, which means likely making adjustments and in some places significant adjustments in the pay bands of what we're providing for these positions is going to be critical to meet the staffing needs, to meet the the service expectations that we have. So, again, for finance, we have had positions that have been open and or in recruitment for a while, and I believe that Ms. White has been able to staff up significantly in key areas, but we are probably, and I think in certain positions, we've been able to make, I'll call it an ad hoc adjustment to, because we realize that we are not getting the candidates we need. But the holistic class account reform is also going to be critical to ensuring that finance can achieve that from a structure and how to make sure we have that sort of laser focus on airline collections in a way that probably, to your point, pays for itself, right? Just like conversation we've had about the assessor's office. Otherwise, sometimes adding capacity and positions creates more revenue rather than just more expense. I think there's probably room in this space to take that lens and view as well.
You're not trying to fix the problem, but this is almost a kind of management issue, not a finance issue, right? And so I don't need someone who is a CPA or,
Different skill set.
you know, I just need someone that can read a balance sheet, go out after these individuals and figure out how to collect those dollars and, you know, let finance folk figure out all the dollars and, you know, the auditors do what they do. We just need someone that can collect this large amount of, I mean, each day in meetings for less money than this.
So, remember, this audit was, the timeframe was during COVID. Since then, finance has done a lot. So Asia is here, and from what I understand, her team has been really on the ball with all of this. So in 2022, they have made a lot of changes already going forward with the system changes that are happening that will help them, help the businesses as well. They've made a lot of procedural changes. So this audit is, you're looking back, right? You're not looking forward. And I've worked in localities where there were elected position employees, and it is not a good time. And I've spent months where I couldn't even get the cash file to reconcile the city's books, because you can't tell an elected official what to do. So.
Oh, I know that person.
It's a matter of finding the additional staff for finance. They are understaffed, and I think, I don't know, before I got here, I keep saying it now, she is all three hats, and it's not because it's one person, it's because that they don't have enough staff under them. 112 compared to 120 something, 137 in Norfolk, right? That's a variation of 25 positions right there. They currently are carrying 23 vacancies.
We have 23
Vacancies,
Okay.
right? So what I'm saying is, it's not just additional staff, we have to fill what we have too. But again, we're in this competition for employees everywhere. So we could throw money at employees and they still may not come, unfortunately. Or it's just the market that we're in. We're having it in police, we're having it in finance, we're having it everywhere. Private sector is experiencing the same thing, which is why we have to find out what our employer of choice and what our niche is. So people come here and they want to be here for us and to do for a public service.
If I may, speaking to the staffing, I have, before I
That's
came,
David Reed.
oh, sorry, David Reed, Senior Deputy Director of Finance. My previous life before coming to the city was in higher ed. And higher ed is constantly fighting over students because there's fewer students graduating high school, going to the same number of colleges. That's going to flow through right to after they graduate college and go into the professional world. So this isn't a small, short time issue. This is going to be an ongoing issue to find the qualified candidates and get staffed appropriately all across.
And I'll use this maybe try to, from our side, be that confident. This is why technology and automation are going to have to be part of our solution, because staffing up isn't always going to be how we're going to be able to meet the growing need. We're going to have to work smarter, just as we are proposing in policing and in other areas. Technology is going to have to fill some of the gaps for positions that we just can't fill on the market.
So one last point of clarification. So while it's 3 years plus 1 for the assessment, because our finance director is all 3, on the commissioner side, she actually has more time to collect. She has 5 years to collect. And then if needed, she can actually go to court and get an additional 5. So I think there's a total of like 15 years that we can collect.
Well, that brings me to the last question, I hope, on this topic. It's a granular question that I've got. 2020, COVID strikes, it's chaotic in the restaurant business. There are with all kinds of problems. You have a number of non-filed restaurants that filed previously but didn't file in 2020. Unless, as I understood it, unless you issue a statutory assessment by December 31 of this year, then you would lose the right to go after that group of people in 2020. And my question is, you said you guys were trying to go back and figure out now who should really be getting a statutory assessment and who shouldn't. Will you have that task completed for the 2020 non-filers by the end of this calendar year so you can get the assessments out?
Is it calendar year or fiscal year?
I think it's calendar year, as I understand.
Calendar year.
So right now, we are doing a process, with all non-filers for 3 years and moving forward. So 3 years back. And
Starting
there,
in 2020?
yes, so we can get the statutory assessment so that we do not lose them. As of today, and I took over tax enforcement, beginning of May. We started this process on the 15th. We have already reviewed, visited, contacted at least 308. So we are clearing out those people who are closed. If you are still open and operating, you are being contacted. And there's a process. So if you do not contact us back and we haven't heard from you within, let's say, the 5-day period from the notice that we give you, then we give you a final notice. That's your 3 days. After that, you'll have a statutory assessment, which allows the city to collect on it. So it is a process, and it's a large group. We are working through zip codes, and so we are just about done with our first zip code. We will move to the next. So
But you expect to have that completed for 2020 non-filers
we are
by the end
hopeful.
of this year.
We are hopeful. Yes.
That's helpful. Thank you very much.
Good work.
Okay.
Thanks.
Great, well, this has been a useful discussion. Thank you very much. Our next report is relates to Parks and Recreation revenues.
As you noted, this is the Parks and Recreation Revenue Collections Audit. It's part of the fiscal year 23 audit plan. I start off by thanking our staff that worked on the audit, Leanne Castro, Andrew Ramos, as well as Selma Thomas. And a special thank you to Chris Brophy and his team for the parks. They are super responsive and super helpful. Talking usually same day turnaround with requests, so that is much appreciated and helps an audit very smoothly. So the objective of this audit was to evaluate income controls over the collection of revenues. And the scope of this audit was for 12 months into December 31st, 2022. As well as the current operating environment. During calendar year 2022, Parks collected approximately $3.9 million in revenues, of which 1.9 came from funds for secondaries. Now I will turn it over to Leanne for some more background and what works well and what is.
Parks collects a variety of fees at their community centers, cemeteries, and after-school programs. Fees are collected for a range of services, including burial services, recreational programs for children and adults, after-school programs, summer camps, sports leagues, and facility rentals. All fees except for activities and programs are set by city ordinance. And activity and program fees are set based on research of similar programs in other localities. Fees are paid by check, money order, or credit card, in person, over the phone, or online, and cash is never accepted as a form of payment. So what works well? Supporting documentation. We reviewed 189 cemetery receipts totaling approximately $304,000 for August to September of 2022. Receipts and supporting documentation were maintained for all transactions. All payments were recorded on the daily cash and credit statement reports and the park system for installment payments. There were 1,042 non-cemetery payment transactions totaling approximately $126,000 posted in their system for the same months. and deposit documentation was maintained for all 406 transactions that were applicable. Revenues traced the general ledger. We verified all payments and rabbits for August and September, and there were no missing or extra amounts posted during those months. Now we'll go into what needs improvement. Revenue processing. Parks revenue handling policy was not consistent with the city finances cash collection policy. There were different timeframes for required depending on the amount of deposit. When comparing to city policy, we reviewed 157 checks received by cemeteries in August and September. 69 were not deposited within the 2 business days of receipt per city finances cash collection policy. Additionally, we reviewed 406 non-cemetery transactions and 285 were not deposited in compliance with city policy. There were also 4 receipts totaling $5,270 that were credited to the incorrect cemetery. Lack of segregation of duties. Segregation of duties also needs improvement for non-cemetery transactions as the same employee both made and reconciled the deposits. Also, during the audit scope, there was no formal refunds policy in place. We reviewed 65 of 543 refunds processed in the system during calendar year 22. 11 refunds included non-refundable fees. 12 did not have required staff signatures, and 23 did not have adequate support to determine if the refunds were requested on time in compliance with the department's informal policy. Additionally, there was no formal policy on applying fee waivers or discounts. Financial assistance in the form of scholarships, fee discounts, or waivers are available for participants when needed. However, the policy and process had not been formalized. Finally, there was no process in place to ensure that all fees were collected prior to participation in programs and activities. In conclusion, we issued 7 recommendations with 100% concurrence, with implementation dates through August of 23. Time spent. This audit was given 600 hours on the annual audit plan. After planning, we budgeted 775 hours and completed the audit in 955 hours. Questions?
Any response from the city to this audit?
I mean, one, we're probably one of the few departments that embrace working with the audit group. We use it as sort of a good tool for us to improve on. And we've had a really good working relationship with them. There were some policies that we need to put in place from this that we're working on. Part of our biggest thing though too, I know that we've said this over and over, but we've all had staffing shortages. And when we have a lot of getting the stuff to the bank, you know, our priority is really making sure our programs are happening. We get those things, then we have 21 different sites that we would have to then take it to our Admiral Street and then bring it to City Hall. So if you think about that whole process for us for reconciliation, it's a very time consuming and why we add a couple of dates and don't always meet the city standard. And so we've asked if there's any way to sort of consider that city standard or what the state statute is to see if there's some more flexibility in that. So that we can really come better into meeting those pieces. But the other thing that we really want to stress, some of the different things, especially the fee waiver process, and I'm going to steal this from someone who's in the room because it was one of the best quotes I've heard in a long time. We want to give kids the footballs in their hands, the tennis balls in their hands, all those sort of different pieces, the art brushes and things. And we're not always worried about getting the fees for our programs. If we can get those type of things and get them into our buildings, we haven't been really good about always making sure that they pay or they pay before the start of the program, because a lot of families that we deal with, that's not a reality of what they can do. We also know some of these fee waiver programs and forms that we want people to fill out. It's great if you have a high level of literacy. It doesn't work for our neighborhoods that don't. So those are some of the challenges that we face in getting these things completed. It's not that we don't want to, but we had in the past our staff were paying out of their own pocket for people to be in our programs. That's not something we want to see happen. We are talking about in the big picture of our $3 billion budget, a very small amount of stuff that we've not been able to have documented for the fee waiver and things, but we feel like the stories that have happened and the things that are happening with those kids are well worth that. But we're going to continue to work on developing a more tighter policy with also understanding the grace that we need to give to some of our citizens in our community.
Any questions or comments?
Elaborate on it.
Yeah.
I just have just sort of a general question for understanding.
a number of the comments seem to me to relate to the organization chart, the administration function. And at least the way it's drawn, there are two separate administration functions. Is that correct? Or are they together physically?
So, go ahead, he's talking about cemeteries versus central admin.
Yeah, so they're separate. Cemeteries is a separate enterprise system. So it's an enterprise account where all their revenue comes in, it goes out, and they're in a separate office. And our Admiral Street, so they are based at Riverview Cemetery, and then Parks and Recreation is based at 1209.
So at least the arrow here is that everything from cemeteries goes to parks.
And that's really it does. So they're a separate sort of enterprise account that is under the Department of Parks and Recreation.
Yes. Anyway, it just occurred to me if the policies are likely to cross over and be implemented by administration in two different areas. And it just struck me as a possibility that they could be mutually supporting one another. And they're so separate. So just from an employee standpoint, vacations or sick days or whatever, is there an opportunity to have a process as you do your process route, to have a better support system between these two administrative functions? It's just a question that jumped out at me.
And I think maybe sometimes on paper it doesn't explain the whole story as well.
Yeah.
But our business staff actually will go out there when they have people out and will support them. But the other thing just to understand is that when I first started, we probably had 10 people in our business office. We've had a lot of where we had to figure out where our most important focus was. We reduced that down to 4. And those 6 are now out in our recreation centers or in our park staff doing direct service, because we felt that's where those positions needed to go. We had to really determine what our priority is. But we've been trying to backfill with our cemeteries of where they'll go over when they can and they'll pick up the deposits to do that. So it's not that it's separate. It is just sort of a designation of duties, and what cemeteries is good at, cemeteries does what our business office, but we work in partnership together.
Thanks.
Yes.
So just feedback a little bit. One, Chris, you know how I feel about Parks and Rec. Period. I believe it's a lifelong of our community. And we don't put enough money, in my opinion. Not that we don't care, but I just think there's so much more that we can continue to do as we assist with program standpoint. I've always had the benefit and the privilege of throwing an event at a Parks and Rec space, facility, et cetera, and having everything dealt with and handled because I'm on city council. We're doing an event this weekend. To see how involved it is and not centralized, I wonder how many individuals choose not to hold an event at a City of Richmond Parks and Rec facility versus those that do. I mean, it is a sheet of phone calls to make just to have it in one space underneath one umbrella of the City of Richmond. And I'll meet with you one-on-one on that, but if it's this hard to hold a function in one of our facilities, and again, one is on one side of the hat of politics, campaign, and another one's on church, and Rikers easy to do it. We can go in and rent Dory Park and it's done, right? Forest Hill Park, it took us forever. And forever is hyperbole, but it was so involved. And so how many organizations are out there deciding, hey, you know what, we'll go to Chesterfield, Rockwood, we'll go to Doherty Park, because it's just easier to do business with counties than the city. So, but I am committed.
No, I think part of the challenge is because there are so many different agencies of how we have it done. Public Works mows the grass and has to do those different things. We pick up the trash.
We have to make sure we have RPD involved for security. We have to do all those different pieces. And it is a lot to coordinate on that part, and it does make it challenging. But we also really want to make sure we have involved all those players so that we have, we're making sure all the codes that have been established for us to follow have been followed. So that we make sure that if you have a vendor there, that you have that vendor license and you're, charging meals tax or charging those different things. So we have all those pieces that we've been entrusted with to have those events and have make sure we're doing. And so I think some of the things, we're just trying to balance all that stuff out. But again, I think it goes back to the common thing. If we had more dedicated resources, more dedicated staff, then we could focus on them doing that. But when we have to prioritize where our people go, our highest priority right now is not revenue making. It is direct services into our neighborhoods of high school.
Chris,
Thank you. Any other comment, questions? Okay, thank you. Okay, the last report is on social services adoption.
So we completed this audit as a part of the FY 23 annual audit plan. I like this Department of Social Services staff for all of their assistance and cooperation, as well as thank our auditors, Gerald and Selma, for their assistance on this project. The objective of the audit was to test the expenditures and compliance with the adoption program. Our scope included the adoption assistance eligibility and program expenditures for FY 22 only. We were unable to assess the adoption timeliness as we did run into a scope limitation with this particular audit. We were not able to access some of the state's data through the OASIS system with the state. Based on state code, they felt we didn't meet the definition to be able to access that information. So we couldn't go in to assess the timeliness of the adoption or look at some of the efficiencies of those processes. So this audit focused strictly on the adoption eligibility piece and program expenditures. Okay, just a little background about the adoption program itself. Adoption is the placement of children that have been permanently and legally separated from their birth parents, and they are adopted by a new family, and the adopted parents are given the same rights and obligations as biological parents. A child can be placed for adoption once the parental rights have been terminated, and Richmond Department of Social Services has been granted the authority to place the child for adoption, and they consent to the child's adoption. During FY 22, there were 66 children in foster care that had an adoption goal. Of those children, 59 had the parental rights terminated and 24 were adopted. The federal goal to finalize adoptions is within 24 months of a youth entering foster care. On average, 86% of the Richmond Department of Social Services adoption cases over the past 5 years have taken more than 24 months to finalize from the time that the child is removed from their home. The state's average for finalizing adoptions after 24 months was 68% for the same time period. As I said before, we were not able to access some of the adoption data, so we really couldn't get to contributing factors that were specific for the Richmond Department cases, but we were able to get some contributing factors or identify those based on discussions with our staff, as well as looking at a report that was issued by JLARC through the state agency. And some of the factors that could impact the timeliness of adoption include there's a shortage of foster care families in the state. Our foster care homes are duly approved, so they could be a foster care home or they could serve as an adoptive home, and there are shortages in the state. Sometimes there may be difficulties in placing certain children, children that may have extreme behavior issues, may be a little bit more difficult to place. Sometimes there are large sibling groups that they're trying to place together for adoption so that we don't split the family unit. Those could be a little harder, a little bit more challenging to place as well as teenagers. And those are some of the issues that we've identified. We also may have foster homes who may only be interested in fostering and not serving as adoptive parents. Adoption payments totaling $7 million were paid during FY 22. That includes $6.4 million in adoption assistance payments, as well as administrative and support costs. Adoption assistance payments are issued to help facilitate adoptive placements, They provide the adopted parents with the necessary financial assistance to allow them to be able to adopt and care for children that may have special needs. So RDSS adoption unit screens request for assistance by using the state's screening tool. And that helps them determine if the children meet the eligibility requirements, as well as identify if federal or state funding is going to be used for their assistance payments. That information, the application along with supporting documentation is then forwarded to the state. And the state has an assistance agreement negotiator, and they screen and negotiate with the parents to determine the type of assistance they will receive, as well as the dollar amount. Next, I would like to discuss what works well. So we analyze the expenditures and the payments and determine that adequate control and procedures are in place to make sure the assistance and payments were paid in accordance with the agreement terms and conditions, that they were paid at the correct amount or rates. If there were changes here that makes the maintenance rates for kids aging up the category, or the state increased the rates, they properly adjusted the rates. Also, there was minimal risk of duplicate payments occurring. If they did occur, they were able to identify and recoup those, as well as they were able to stop foster care payments once they started the adoption payments. So we didn't have an overlap in the two fund sources. Next, I'll discuss what needs improvement. So our first finding, we identified that adoption assistance payments totaling approximately 6.4 million were issued for 380 children and youth during FY 22. At least 2 of those children that were adopted re-entered foster care, and the adopted parents continued to receive the adoption assistance payments for more than a year, totaling 65,000, and that's the total for both children. RDSS referred the adoptive parents to child support enforcement and issued a court order for child support. However, no money was received and remitted to the city. They did not determine whether or not these cases, or could have taken a step further, rather, to determine if the cases were qualified to stop the assistance payments. I want to kind of make it clear too that just because a kid comes back into foster care doesn't mean they can automatically terminate the assistance agreements for the payments. There's some steps they have to go through. And one of the issues, or one of the reasons they could terminate those agreements, if they determine that the adopted parents are no longer providing financial assistance. And that was something that could have done a little bit better with looking at that process to see.
In the case of those two, were there payments being made to the foster parents as well as adopted parents? It was double payment for the children.
Yes. Finding number 2, we actually assisted our external auditors with the single audit testing for the adoption eligibility program. And so we tested 40 children that received Title IV adoption assistance payments during FY 22, and we were tested for compliance with the eligibility criteria. And we noted that 40 out of the 4 children, they met the eligibility requirements, meaning that the kids had special needs. RDSS was not able to place those children or have them adopted without providing assistance. And they also, the adoption agreements were signed prior to the final adoption decree. What we did notice in reviewing the files was there was an opportunity to improve the file documentation. 9 out of the 40 children, there wasn't sufficient evidence in the folders regarding the background check completions. So they had home studies or they had narratives in the files that referenced the checks were done, but they didn't always specify the time frame or when those checks were done. We also noted that in those files that there was inconsistency in the documentation. Some were more detailed than others regarding the background checks. And so that's why we said there's an opportunity here for them to increase it. We're not saying that the checks were not necessarily done. It's just that they didn't have sufficient documentation to demonstrate when the checks occurred. Conclusions here. 2 recommendations were issued. The department concurred rather with both recommendations. The anticipated full implementation in July of 23. Annual plan, we budgeted 800 hours. After planning, we budgeted 880 and actual hours were 87. Any questions?
Any comments from the city administration or?
If I could, I'd like to just start a couple points here. It's just, you know, I have a hard time talking about this issue without mentioning my own experience as a foster parent. My wife and I were foster parents to 2 kids, several years ago. Working closely with Ms. Giles during that time. I was in a different role where I wasn't, you know, as directly all responsible with our DSS. But it's an eye-opening experience to be part of the system, particularly from the perspective of a foster parent. Some of my questions, you know, looking at the data, because, you know, one of the, I'll let Ms. Giles speak more on the payment side of things, because I think she probably has more direct detail in response, but, you know, one of the data points that stand out to me that I would either, you know, would like to see more analysis on or have opportunity to dive further into is the, you know, 86% of adoption cases have taken more than 24 months to place versus the state average 68%. I do know that one of the challenges we have in the city, that goes beyond adoption into the foster care side of things, is that teenage placements are particularly challenging. So I would anticipate, without having the data to back it up, that if you were to compare our data regarding the ages of kids who were then now permanently moved to with an adoption track, I would like to see how our average age compares to the state, which is acknowledging that, you know, teens, generally speaking, have present additional challenges, but behavioral, but also finding suitable placements and otherwise, we have certainly been aware of and cognizant and working with both the state as well as nonprofit and the faith community partners. Virginia Kids Belong is a partner of ours that works to help us provide additional supports, connection, resources, support for families, both in the foster and adoption space, and particularly, you know, supporting families through supporting kids in this post-traumatic scenario. So I think, again, it's the data is important, should help us define. It also should help us with both educating and asking for the community to step up and step into the roles of supporting these kids who are in this need, particularly those, you know, who are harder to place. So with that, I'll go up to Mr. House.
Thank you, Mr. Saunders, and thank you for stepping up and serving as a foster parent. One of the toughest jobs I think anybody. I echo the sentiments and appreciate the auditors. I think that they have worked with DSS for the past 8 years that I've been here every single year. And so they're a permanent part of the DSS family that have helped us to improve our practices and how we serve others. So very appreciative of that. I will say that while they weren't able to get access to some of the state system, and we tried diligently and repeatedly to get them access through multiple avenues, it just still legal law. I will say ancillarily, I believe some of those challenges are around our youth who experience high acuity issues that are difficult to place. I'm serving on the Governor of State and Sound Task Force of the issue around the state around finding appropriate placements for kids who have multiple levels of need. That you tend to see that with our kids who are older. So there's the mental health component that drives some behavioral issues. Add COVID to that mix, and it makes it very difficult to find placements for those youth, whether that is a foster home or a residential. We're having challenges from the state with all of it. And so those, I think, are some of the driving factors behind what takes time. And then you add COVID and not having work, not having it consistently, and then appeals of certain matters that just changes the time frame and how quickly we can get a child from the moment they come into care to otherwise are terminated. With respect to the payments, gratefully, we don't have a number of placements that disrupt regularly when we're having to look at that. So we need to make sure that we put some processes in place consistently when that does happen. So we've worked for every placement disruption, we will make sure that we're following those with, child support enforcement to seek have those payments for, child support paid until we can determine whether or not it's appropriate to terminate that agreement, because terminate the adoption or terminate parental rights. That's not our goal. We want to make sure kids stay with their families, whether that's their family of origin, a relative, or their adopted parents. That should not be the first goal. When the placements disrupt, so there will be a season of working with them. So we will also seek, under certain circumstances, to see if they want to voluntarily terminate their parental rights, which can be one of those things that will allow us to immediately stop that adoption assistance. And if not, there's going to be a season of working with them to reunite. And if that does not work out, working with our attorneys to look at what termination of parental rights looks like under a different statute. Think I answered all of that, but happy to answer another question.
Are there any other questions or comments from the committee?
An observation. I was struck particularly, and it's been referred to here, that there are important areas that could not be audited. Right. And so the question for the administration or elected officials is how do you get the information you need to come up with sound policy and program when you're not permitted to get timeliness information and information on post-placement visits. So I just want to observe this audits in some ways couldn't do some of the most important work you need to have done.
We certainly hope to have done more than we were permitted, but it wasn't our local.
I understand,
And
but
so
still,
I will tell you
it's the
that,
administration's responsibility to do it well.
so DSS does have access to that data and can do that analytics. And the state audit functions have access to that data and can do that analytics as well. Like the state OSIG has a performance audit function and an inspector general function as well. So we did communicate to that state function that they may not be getting the support from the local level auditors, not only us, but others. And that they may want to, I know they did a CPS audit at the state level, so maybe they want to look at this at a statewide level at there, but we were not permitted.
Yeah, no, I understand that. Just say, I don't know to what exactly. What's missing from the administration of this gals for starter?
If I may, from that standpoint, we are actually part of the federal audit, which is far more comprehensive than our local audit, and it's called the Children Family Services Review. I think I got that accurately. It's been going on for 3 years, so it also doesn't just include looking at our files, it includes meeting with judges regarding their life, the parents, the children, the families and relatives on cases. So they're full samples and look at about 10 cases of our CPS, following it through the process, but we've been a part of that for 3 years. So it's a very comprehensive review from that standpoint. And then the state does the regular quality assurance reviews, particularly around the funding piece and how we're paying it for in compliance with the policy. So it's happening, it's just not happening.
How's the, I guess maybe the question is, what's the feedback? Since we're not auditing it, what do they say?
The feedback with the Children, Family and Services Review, there have been a couple of circumstances where we need to engage parents who are incarcerated more. But outside of that, we received positive feedback. From the funding piece of it, we've actually passed those audits. There might be a documentation that is not in that particular file when you look at it, but we're able to submit it. I think the last audit, in fact, we didn't even have to do a follow-up review with them after it because we passed. And that happens quarterly.
So I guess I have a comment. Or if just if our city leadership is confident that they have the data and the information from whatever reliable source to manage well, that's good. If something's missing, some thought needs to be given. It's hard to manage it, but it is.
And so as soon as you had said something there, I looked over and Ms. Johnson said, "Split that." We both understood that. But what I can tell you, having worked with her quite a few times, she's the first, if there is any type of discrepancy, and before we get acquainted, Ms. Johnson's the first one to pick up the phone and call our office and say, "Hey, Jim, I think something might be here. Can you give us a look?" And we come down right away. We've worked well together. We've got one conviction at one of those that she personally called on. Some serving federal time for it. So we work very close whenever she feels there is that issue, or if the federal side comes up and says they have a discrepancy here, she's been the first to call us and say, "Hey, can you come take a look?" 'Cause we can look at a little bit more, a few things more. But we've got a great working relationship with them, tool trucks, but what
I
they're
think
doing.
we got a really tough people with the help. Sorry for the. Thank you.
Okay, any other questions or comments?
I just have to add, I think it is important. Social services is, I don't want to say it's unique, but it's a different structure and system than almost any other city agency. It's, I'm gonna get the language probably wrong, but it's essentially a state. It is a locally administered department with state supervision, right? And so like the health district, it's a different structure than public works, right, which doesn't report to me. It's just a different responsibility. So we rely on our director to be in good contact with both the federal and state supervision. So I will say, I do stay in touch with the Secretary of Health, and at times we'll connect with the state director of DSS, particularly, when there's areas where changes are upcoming. Medicaid unraveling is one. We're in conversations with the state because we have to locally administer what is changing at the state and federal levels. So, again, we work to make sure the city is prepared to respond, but it does have challenges for local administration of a state supervised. Essentially, it's really under the broader state agency of the DSS, as much, if not more so, than it is under city administration. It does present challenges, and we all the time.
As an audit committee, this, whereas internal auditor, there's only so much we can audit. So my point,
Yes, sir.
we have to be careful and not to think we can
We'll just
provide feedback that's really helpful, because it's really coming from someplace else other than us.
And anecdotally, just, there have been times where I've, received a concern from a citizen or otherwise. I reach out to Ms. Giles, and she can't share with me the details of the case, or I'm not asking for it, and I respect that is the position, but the protections for the children and families, supersede our desire to know. We're, we respect those boundaries.
Thank you, Jeff.
Okay, next item on the agenda is the Inspector General's update.
So, afternoon, all, we have 28 open cases currently. One of those cases is referred to a federal agency that we're working closely with, one of our newer cases, that one. Possibly a second one will be going over soon again, that has to do with some ARPA dollars and some federal funding. 8 cases we've opened here in the last less than 35 days, not the last 30 days. And then 1 open referred case to a federal agency. That open referred case is still one that was a plea deal that came out that wasn't guilty plea. There are co-conspirators, there are some other players in there that case that's remained open. We've been some cooperation that's going on. So more to follow on that case.
Yeah, I mean, in case anybody missed, the U.S. Attorney's Office put out a statement about a month ago about a guilty plea of a former employee that involved a lot of money that he was responsible for investigating the rate of their attention.
We got a recoup of about 200,000 from that particular plea. We're expecting probably another 300,000 to 400,000 additional as we get more cooperation.
Any questions of Mr. O'Sullivan? Okay, the next item on the agenda under all business is the audit plan update for the current fiscal year.
Yes, sir. So if you look at the red, yellow, and green sheet here, you can see the reports from projects that have been completed. We have 2 that are in flight that I believe will be substantially completed by June 30th. And then 3, they are actually on the rollover plan that are in process. Our goal is to complete 90% of the scheduled audits that are on the audit plan, subject to the staffing. I'm about a couple weeks out, but I think we're gonna be at about 86, 87%. And we have carried a senior auditor vacancy for the entire year to couple the one that's vacant now, and there were some vacant at the beginning of the fiscal year. So we're close to meeting our performance target. We did not reschedule the finance pay-in process. I know we talked a lot about RBA pay earlier and some of the changes that are occurring with that. And I think we need to let that settle in, audit some other stuff. And that's why that's not listed as a carryover on the plan, which is for before you the next meeting.
Any questions of Mr. Lester on the audits? Okay, next in is the 24 audit plan.
Yes, sir. And I have sent that to the committee. This is a plan that is based on sort of a 3-legged stool, I would call it. First, we look at the available staffing hours we have. There's a risk assessment process. I've reached out to all 9 city council members. That's the second leg of the stool. And the administration is the third leg of the stool. And build an audit plan that's based on requests from council, requests from the administration, and things that are present risks that need to be audited. To include things like cybersecurity is certainly something I'm interested in. We put the continuous auditing on here, which hits multiple areas under one audit umbrella. The APA cost comparative analysis, we actually added a few hours in that this year, Don, because you had asked us to do a little bit of a deeper dive on that. I know you don't, if you remember that or not, but when we presented it last September, that was a request that we had got. So I would ask, if, field any questions. There are various council people that have requested some of these. I could go through it. The bank reconciliation issue, we are doing one now on the accounts payable bank account. But Ms. White asked us, because they haven't fully automated the process for the concentration account. That was the bigger bank reconciliation that we had a year or 2 ago. So that's shown on the current audit plan. You have one that we're wrapping up by June 30th and one that's on the plan for next year. But I don't know if any members have
Any questions on this or suggestions or comments?
The question, the numbering system is random or is it order of priority?
It's alphabetical.
Alphabetical, okay. So as you set your schedule,
I
that's a
look at
staffing issue.
certain things that we have to do, like in the fall, we begin the single audit support. I try not to overload one department with multiple audits at the same time. So we waited till the meals tax audit was done until we could start the personal property tax audits. We do try to tread a little lighter on certain departments like budget. It's not a good time to go to budget, probably between December and April. It's a little bit of calling audibles at the line of scrimmage when you're coming up there with the staffing you have and where the resources are, but we do try to work with the departments and not overload them at any time.
One other question, if you don't mind, that we always have hours for external audit assistance. Is that cost effective? I mean, is it the right way to allocate your resources?
All I can tell you is it's 300 hours. It's contractual. It's actually in the contract. And most of the localities that I know of in this area do the same. We did the same at Chesterfield. And I do believe it's cost effective to keep the cost of our external audit services reasonable and down. Again, it's easier to pay our staff than to pay a CPA firm for those same hours. So,
As I look at all you have on the schedule, it's not a huge percentage.
No,
But it's each and not doing other things. So
it's 300 hours and again, it's something that has to be done in support of the single audit or the actual audit. And it is something common, at least in this area, that the other internal audit firm departments do for their.
It makes sense to me.
Any other questions or comments? Could I have a motion from the committee to approve the audit proposal for next fiscal?
So moved.
Second.
Second.
All right, all in favor?
Aye.
You opposed? It's approved. Thank you very much, Bill. And also new business staffing update is.
So we do have one senior audit position open that we're recruiting for. I also have an announcement for the committee here that after a 40-year career primarily in local government, I plan to retire later this year, spend more time with my family. I appreciate the opportunity and support the city council and the administration has provided me. Over the summer, the city is going to be, council is going to begin a recruitment process for my position. And I look forward to continuing to serve to help with a successful transition.
And you will be here for our September meeting, right?
I do plan to be here for the September meeting. Yes, sir. I don't think they'll have the position filled by then.
That's
So, but 40 years, and I give my Lord and Savior thanks for keeping me employed every day since I got out of college.
And it gives us.
There'll be more to say from all of us.
Yes.
The September meeting, but thank you for letting us know who we are.
Thank you for your service.
It's been wonderful working with you.
Okay, folks, the last item on the agenda will be in closed session, and that relates to the DIT audit. I move that the audit committee go into a closed meeting pursuant to section 2.2, item 3711A19 of the Code of Virginia to discuss cybersecurity assessments and security plans and measures of the city information technology system. Because discussion of such information in an open meeting jeopardizes this information technology system. Is there a second to that motion?
Like a second.
All in favor? Aye. It passes. If I could ask everyone who's not involved in this report, please to audit, I would appreciate it.
Which I believe just for another, should be members, and I think the story about here, I think it's a very,
Thanks very much.
I appreciate it.
The electronic.
Yes, we just have to stay in.
Sam, you're there still, right?
Well, we moved.
I'm still here.
We got to shift it to a private.
Here's a motion. I'm going to start over again, and would everyone exercise patience? Do I hear a motion in the closed meeting and certify that to the best of each member's knowledge, only public business matters lawfully exempted from open meeting requirements under the Virginia Freedom of Information Act, and only such public business matters as were identified in the motion by which the closed meeting was convened were heard, discussed, or considered in the meeting by the audit committee. Is there a motion?
So moved. Second.
And I need each member to vote aye on the motion. And Mr. Jones.
Aye.
Abstain.
Abstain.
Aye. Aye.
Aye.
Aye.
Mr. Bemis.
Aye.
Okay, the motion carries. And we are out of closed session. Is there any further topics for the good of the order?
I just want to give kudos again to the audit team for the work that they've done for another fiscal year. I set a pretty high bar on this audit plan every year. And they do a good job jumping over that bar or running through it if need be. So, I want to thank them and commend them for their work this year.
Here,
Thank you very much.
Is there any further business? If not, the meeting is adjourned.
Right.
Okay.